Hello, Accounting 2. The lesson that I want to teach you today is Chapter 18, Accounting for Plant Assets and Depreciation. Now, you folks did the vocabulary last week for plant assets and depreciation, and I want you to turn in your textbooks to page 534. On page 534, we start talking about assets and what assets are as far as plant assets. Now, I want to differentiate first the difference between supplies and the difference between store equipment. Supplies are consumables. That's why we adjust supplies, because we use them up and we consume them. Office equipment, store equipment are assets as well, but they are not consumables. We use them, but we don't use them up. We have to, in essence, depreciate them at some point. Depreciation, once again, is taking the value away from an asset yearly. We're going to be talking about and dealing with store equipment and office equipment in this chapter. If you look on page 536, the textbook talks about real property and personal property. Real property is land or anything attached to the land. Real property is, in essence, real estate. Personal property is anything that is property that is not real property or real estate, and it belongs to the individual, and that is personal property. We're also talking about the value of an asset, which is assessed value. Assessed value is, and in this particular chapter, we're going to be dealing with calculating taxes for assessed value. Now, you may have heard your parents talk about the assessed value of their properties. Like if a house is assessed for $150,000, of course you want your assessment to come low, because you have to pay a percentage of the value of your home for tax purposes. What we're going to be doing in this chapter is we're going to be calculating the transaction and journalizing the transaction for property tax expense on a par value for real estate property as well. Now, you need to turn to page 537 in your textbook, and you should have page 29 in the workbook in front of you. Page 29 in the workbook is in the Accounting 2 workbooks, and Miss Anderson should have that available for you. Now, we have in front of us the cash payments journal, and the cash payments journal, once again, I know it's been a while since we've seen a cash payments journal, but it's the journal in which you are going to be taking cash out or writing checks for out of your checkbook. So on page 537, I'm first going to read the transaction on January 3rd. We paid cash for a plant mixer. Now, if it's a plant mixer, it is going to be store equipment. We have two different equipments for this company. We have store equipment and we have office equipment. Store equipment, a paint mixer, would be something that would be in a store, and the customers would see a plant or a paint mixer. Therefore, it constitutes store equipment. So I'd like to bring your attention to this transaction, January 3rd, store equipment. It says here that it's check 142. Please do nothing with the post reference at this time. And it says that this plant mixer is $500. So it's a general debit and it's a cash credit. Very generic, simple transaction. If you look on January 5th, it says that we paid cash for an office chair. An office chair is used only in the office, and our customers do not see an office chair, therefore it's office equipment. This transaction is January 5th, office equipment. The check, according to the textbook, is check number 145, and we have $400 general debit, $400 cash credit. Our next transaction is February 26th. it says that we paid property taxes on real property with an assessed value of $800,000. So the real property's assessed at $800,000, and according to this transaction, the tax rate for this city is 3% of the assessed value. On your calculators, I want you to take $80,000 times 3%. You're going to get $2,400, $2,400. This is your property tax expense. The transaction indicates that you're writing check number 182, and that's going to be a general debit cash credit as well. On July 2nd, we paid cash for a filing cabinet. Now, a filing cabinet, once again, probably would be in an office and it would not be seen by our customers, therefore it's office equipment. That filing cabinet is $260, general debit, $260 cash credit. Now, the textbook's asking you to post these transactions. It's been a while since we manually post, but if you look up here at store equipment, you're going to find store equipment. And again, posting is copying down data. So we're going to put January 3rd here under store equipment because that's our first transaction up here. And it's going to be a $500 debit, $500 debit. $500 debit. This is a debit and this is a debit. So I add this to get my new total. This is 1215. So you're going to put the 1215 up here for post ref. And this is CP for cash payments, journal 1. So you put CP1 down here. Our next journal entry was office equipment for $400 debit. So I'm going to go down here to office equipment. I'm going to put the 5th, CP1, because this is cash payments 1, $400 debit. And then you'll see that you add this to get this, $15,880. Our next one is property tax expense, $2,400. If you go down to your property tax expense, it doesn't have a balance. All you're going to do is put February 26th, $2,400 and bring it over as a debit. And the last transaction up here is office equipment. Office equipment, $260 debit. You're going to put July 2nd. You do have to write out the word July because we haven't made a transaction here since January. So this is a different month. CP1, and this is a debit, and this is a debit. So I add this to get this. Remember, when posting, opposites subtract. In this case, we've had no opposites. We've had debits and debits because we're dealing with assets. So, of course, we don't have to worry about that. You can see these transactions are very easy. And I ask you now to do the on your own. The on your own in your textbook is on page 537, and the on your own in your workbook is on page 30.